Well, your guess is as good as mine as to, whether the economy will keep booming as it is. We're sort of in the bubble of everything, right? Asset valuations are up across the board, whether you look at venture capital or private equity or public equity valuations, real estate, whatever it may be.
Good morning, good afternoon, and good evening. Whenever you may be listening, this is Latitude, the 43 North Podcast, episode 42, I've Got a Pitchbook. This week we feature Pitchbook analyst Dylan Cox, who was recently in Buffalo speaking at an Upstate Venture Connect event. Dylan explains Pitchbook much better than I do, so I'll let him explain that. But in a nutshell, it's the go-to guide to learn more about the startup scene from around the world. Hundreds of analysts at Pitchbook gather data on the worldwide startup scene and compile it into a one-stop shop for VCs, private equity firms, and organizations like 43 North. So let's not waste another minute listening to me ramble and jump right into my interview with Dylan Cox from Pitchbook. Dylan, thanks for joining me on the podcast. You spoke last night at Upstate Venture Connect, and I quickly derailed your journey home briefly. So thanks for swinging in this morning to join us on the podcast.
Yeah, thanks for having me. It's a pleasure.
So the majority of our listeners probably know what Pitchbook is, but I always like to give an overview of things. So for those who might not know what Pitchbook is, give us the quick pitch of what Pitchbook is.
Sure. So Pitchbook is a research and data provider for the venture capital, private equity, and M&A markets. We also do a bit of private debt and real estate, but VCP and M&A are our mainstays. And so what my team does specifically is we provide a layer of intellectual property on top of that data and try and provide some actionability for our clients, whether that's looking at valuations for VC-backed companies or buyout multiples in the private equity space. Sometimes we'll look at fundraising and sources of capital kind of across the private markets.
So in a nutshell, you guys are kind of the Encyclopedia Britannica for the startup scene. If you want to know about a startup, you go to Pitchbook.
Exactly.
How long's Pitchbook been around?
Pitchbook was founded by John Gabbert in 2007 or 2008.
Which was a great year to do a startup.
Right. Yeah, just right into the flames of the financial crisis, especially when most of your clients are financial services firms.
Yeah. I'm sure there's money flowing around left and right.
Oh, yeah.
So as I started this out, you spoke last night at the Upstate Venture Connect event and kind of validated some of the things we've seen in headlines about Western New York in terms of VC dollars and money raised. Give us a little bit of an overview of what you presented to the forum there.
Sure. So in 2017, there were $158 million invested into VC-backed companies in upstate New York. That's the second highest since as far back as our data go to 2007. The dot-com era might have seen a bit more, but really there's been an uptick in VC investment in the last few years in terms of dollar amount. Now that's been accompanied by a decreasing number of financings. That's consistent with our broader sort of U.S. and European VC data. And really that's due to a drawback in seed and angel investing across the board.
Yeah, the biggest year for that type of investing was 2015, if I'm not mistaken.
That's right. It was about $200 million in upstate New York specifically in 2015.
In 2017, there was kind of four big companies that were able to raise locally. I think a lot of people remember Sentient Science raised about $22 million
right.
from outside VC dollars, correct?
That's right. That was from a Series B, $22.5 million from Georgian Partners, who I believe is out of Toronto. So that was another one of the themes we talked about last night is outside capital coming into upstate New York.
We call Toronto North Buffalo up here, which drives them crazy, but at least I call them North Buffalo. There was four kind of big deals made, but that also means that only equated to about 100 million and change. So that means there was still another 50 or so million dollars of kind of those smaller, maybe $1 million raises, $500,000 raises. So is that evidence that, there's this idea of an ecosystem kind of building in Buffalo's maybe becoming a little bit of a hub, even if it is on a smaller scale?
Well, I think we've seen that across the U.S. There's been some work done recently by one of my colleagues, Joel Sostheim, on the development of these sort of non-coastal VC ecosystems. So whether you look at upstate New York or Austin, Texas, or Denver, or other sort of non-coastal mid-America regions, the proportion of VC activity coming from those regions has increased in recent years. I think investors have realized that maybe the valuations in Silicon Valley or New York are not sustainable, and that there is plenty of entrepreneurial talent in other areas.
Well, especially because of there's so many universities out there, in a lot of this, the ecosystems that are kind of rising, they kind of partner with these research universities, UB, Texas, Boulder. They have that kind of relationship with a university. But as you said, it's not sustainable in New York, Boston, LA. I mean, the cost of just doing business there is unreasonable at this point. Sure.
And you mentioned the universities in some of these regions. What Joelle looked at in her research specifically was Colorado, Texas, Pennsylvania, and Florida. So you could look at Colorado School of Mines, UT Austin, maybe Carnegie Mellon in Pittsburgh, and then sort of universities across the board in Florida are some regions where we've seen a big uptick. I also talked to some investors here at 43 North last night who were pointing to Cornell as maybe being that hub in Western New York. Which I think makes a lot of sense.
Yeah, I mean, you can only do research for so long. You eventually have to commercialize it, right?
Exactly.
We can't just rely on these research dollars forever. So why are things like this happening? Why are VCs, why are private equity investors, why are they, I wouldn't say abandoning the LAs, the Bostons, and New York cities, but why are they now looking inward, so to speak, across the plains and Midwest?
I'd certainly emphasize that they're not abandoning the coast. In the U.S., we've seen in 2017 we saw the highest dollar amount vested since the .com era. So still plenty of fundraising or VC capital to be had on the coast. But there's really, I believe, been a change in public sentiment around sort of those elite venture capital markets. You look at some funds recently that are sort of doing roadshows across mid-America and trying to invest back in the Rust Belt or other areas that haven't seen the kind of VC interests that Silicon Valley and New York are famous for.
You just can't afford a bus ride in Silicon Valley, let alone to do business.
Right. The cost of doing business is so much greater on the coast. I live in Seattle. It's a similar story there. But whether you're looking at cost of office space or talent or housing for your employees or any of the above, it is easier to have a sustainable burn rate when you're putting VC dollars into these maybe what we would think of as secondary VC markets.
Well, it's one of the pitches we do here at 43 North. Like, listen, we the grand prize is $1 million. That gets you a lot farther in Buffalo than it does in Boston, New York, or LA.
It does.
I've seen some clickbaity titles out there of, the venture capital money is running out and it's doom and gloom, possibly another .com burst of, the web 3.0 or whatever the case may be. You're a data guy. What's the outlook for the next few years?
Well, your guess is as good as mine as to, whether the economy will keep booming as it is. Yeah. We're sort of in the bubble of everything, right? Yep. Asset valuations are up across the board, whether you look at venture capital or private equity or public equity valuations, real estate, whatever it may be, cryptocurrencies these days. But we have seen sustained fundraising in the venture capital markets. The largest venture capital fund ever raised closed in 2017. That was New Enterprise Associates. I believe it was $3.3 billion.
Small chunk of change.
Yeah, just a little bit. And so that's been one of the drivers in the venture capital industry is a move towards later stage deals. I mentioned sort of a stagnation in the seed and angel rounds. If you raise $3.3 billion, it's hard to deploy that capital into seed rounds or Series A or even B.
Mm-hmm. Do you think, and you've seen a lot of the data, as we see more investment into places like Buffalo, Austin, and in Colorado, as things starting to tighten up, do you think that VC firms will quickly abandon these new emerging hubs to go back to what's comfortable, or do they double down and try to stick it out?
So I believe in an ideal world, these markets become self-reinforcing. So in these emerging markets, you have, VC dollars coming in that hopefully create a few successful companies that spawn higher employment, right? That spawn, some successful founders that can be mentors to new founders coming through incubators like 43 North and elsewhere. So in an ideal world, the investment sticks around, right? And it's not just one or two funds or incubators at a time.
Can we expect this kind of extended VC life cycle? Is it worthwhile for companies to exit anymore? Is it, or just keep raising money until you've tapped all the wells?
So as you mentioned, the median time from first venture capital funding in 2017 was about 5.5 years. Mm-hmm. That was the highest that we've tracked. The first time it's been above 5 years. And as you touched on, that's a big driver of that is the availability of later stage capital. So these larger venture capital funds are sort of saving dry powder and doubling down on their winners, right? And you see, many unicorns that are delaying a public offering or a sale to a strategic acquirer, because really there's no need to go public when you've got so much capital available to you.
Well, and those were all the headline articles back January last year. You're going to see an Uber IPO, you're going to see a Spotify IPO, Airbnb, and then none of that happened.
Sure. So Spotify filed recently. That's an interesting one.
An interesting,
sort of an alternative route. But we've got some other research. Kyle Stanford is a great VC analyst on our team, put out some research talking about sort of predicting that some of these unicorns will have to hit the exit routes in 2018, that, eventually investors, employers, founders, everyone seeks liquidity at a certain point.
I mean, the VCs, they want these companies to exit eventually, right? That's the goal.
Right. At a certain point, you have to return capital to your LPs.
Yeah. And the only way to really do that is to eventually go public.
Right.
It's the end of the road. Hopefully, though, we can all enjoy a few shares of Uber or something like that. I know you have to. I appreciate you coming. You have to catch a flight here in a few minutes. Why, and we'll kind of shift now to the, startups using Pitchbook. A lot of the companies here subscribe to Pitchbook. For those companies starting out, why is Pitchbook such a useful tool?
So I talked to a couple of founders here at 43 North last night that were, using it to look at some of the rounds their potential competitors have been raising, looking at cap tables and valuation figures for similar companies, sort of get an idea of where you should be valuing yourself going into a financing round. And then for, incubators like 43 North or VC firms, it's a good way to source startups that may fit your profile. So I know here at 43 North, you're trying to source companies that would be a good fit in Buffalo, be a good fit for that $1 million prize that you mentioned, and that maybe have some are at the right stage and in the right industry where Buffalo or whatever market you're in, and those companies sort of have complementary strength.
Getting data on a lot of these companies is, they're not public companies, so that can't be an easy task. I'm sure some companies publicly disclose, they just input that data into Pitchbook, but I'm sure it's not a fun goose chase to get some of this data, right?
It can be difficult, but we've got a fantastic research team that puts this all together. We've got web crawlers that are scanning the web, and any press release or piece of news that comes out 24/7. We've got a primary research team that's reaching out to companies and to investors, confirming all of these transaction details. And we've also got a lot of GPs these days that are self-reporting to Pitchbook because they've realized the benefit of having your returns information in a database that limited partners, potential investors, are looking at.
And kind of wrapping things up, how can I get my Pitchbook ranking up? Is there anything I can do? No. In your, you like I said earlier, you look at a lot of data, which, bless you for doing that, because I see a few too many pie graphs in my day, and I'm just like, I'm done. What is your favorite type of graph? Is it a bar graph, pie graph? What kind of?
The one that drives me crazy is the 3D pie chart. That's the one I really can't stand. We try and stay away from that.
We can make it 3D. It'll be better.
Yeah.
What can places like Buffalo do? Buffalo for a long time got beat up, companies leaving it, and that's why, things like Z80 Labs launched in New York, Startup New York, 43 North came about just to try to inject some life back into, even 5 years ago, there's only $6 million of VC money that came into Buffalo. Now we're seeing over $100 million in the region, which, again, in the grand scheme of things, very small, like compared to the coasts. But what can regions like this do to keep that momentum going?
I think the good work that those at Z80 and 43 North, as you mentioned, are doing, raising money however you can, whether it be through the state or traditional VC backers, and then somehow incentivizing those companies, those startups, to stick around once they've gone through that incubation period.
So just keep doubling down then, huh?
Keep doubling down, yeah. That's the idea is, self-reinforcing ecosystem.
That's right. All right, Dylan, thank you so much for joining us. We got to get you to the airport so you aren't walking back to Seattle. Thanks for joining us on the podcast.
Thanks, Nate. I really appreciate it.
Talk to you soon. I want to thank Dylan for joining me on the podcast this week. If you want to learn more about Pitchbook, visit their website, pitchbook.com. I also want to thank everyone listening to this podcast. Without you and your feedback, I'd just be a guy talking into a microphone in John's office. So thank you. If you haven't done so already, I'd ask you to head over to iTunes and please leave a 5-star review of this podcast. It helps our content get positioned much better on the platform, and I think I speak for everybody in the startup scene that we want more people to learn about the great things happening in Buffalo. And hey, if you have any ideas for potential guests or a specific topic you want to hear on the podcast, shoot me an email, podcast@43north.org, or hit us up on Twitter or Facebook. I can be found at Nate Benson, so feel free to troll me on Twitter, and that's the whole ball of wax. So for 43 North, I'm Nate Benson, and we'll see you at the next one.